Just want to double check on this. You're live. Okay. Okay, so let's start. Yeah, because we have a total of 50. It's funny, I have to do between 56 to 59 minutes on the webcam. The show itself will take less than that. But for those people in the audience, this is the Best of Investing radio show. And we will get started right away. You guys all set?
Yes, sir.
All right, here we go. Well, welcome. You're listening to the Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark. I had it written down as Mark. Non-Fun of Pacific Private Money. Mark Hunt is off today. Yeah, you tricked me. You put on your Mark Hunt mask on, and I couldn't tell. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And that certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. And again, I want to make a mention for Go Girl. Remember that drink, the energy drink? I told you about it last week. I got all this great energy.
Try it out every time.
I know. I had some just before I came on. That's why I got all this energy. So go to Safeway. Actually, I don't know where else they carry it, but Safeway has it for like $1.50 a can. Lots of energy, good caffeine. Not the bad caffeine, but good caffeine. All right. Today's trivia theme is general entertainment, and our special guest today is Michael Snearly. We're specifically going to talk about workers' comp insurance, but we can cover other kinds of insurance too. So, Michael, welcome back to the Best of Investing, because you were on last time. I think we were talking about security issues, weren't you?
Right. Yeah. Data privacy. It's great to be back.
Okay.
Thank you.
You're very welcome. So, first of all, is there anything new going on in the workers' comp field?
Yeah, there's always something new. The newer trends are related to, everyone always keeps their eye on the rates. And the good news has been, we've been the bearer of good news recently, that the rates published with the state have been consistently going down for multiple quarters now. So we're seeing some relief with workers' compensation rates in general.
And is that because, I'm going to take just a wild guess, if the economy is doing well, people are not as likely to get hurt and put in claims?
There's definitely a correlation between people's compensation and the amount of claims they turn in. There is a very strong correlation between that, and as compensation rises, there's less incentive for you to turn in claims. And so, the actuarial data reveals that there's not as many claim submissions.
Well, what's interesting about that is in the old days, I used to sell disability insurance, and you would think, okay, being, let's say, a dentist, it's not a very scary job, for hazardous, right? But when the economy got hit hard, suddenly dentists were, not making as much money, and suddenly, their back was hurting, and their, this was hurting, that was hurting. I'm just picking on them, for just this argument's sake. But then insurance companies were getting so many claims that some of them stopped writing dentists altogether.
Wow.
And it's like, well, being a dentist isn't as scary as being a skyscraper window washer. As dangerous claims. Doesn't matter really what the profession is, right?
That's right. Well, and just to your point, with certain construction class codes, they're differentiated based on how much money the employee makes. So there's one class code for carpenters who make over $30 an hour, and there's another which is you pay a lower rate for that.
Oh, yeah.
And then you pay a higher rate for carpenters who make less than $30 an hour.
Yeah.
There's a couple reasons for that, but one is that carpenters who make less than $30 an hour tend to not have as much experience.
Yeah.
So they hurt themselves more. But they also have a little bit more, psychological incentive to turn in a claim when you're not making as much. Than when you have a good job where you're making a lot of money. Psychologically, there's a difference there.
Is the workers' compensation benefit though different for like on if you claim unemployment insurance, right? It's based on what your wages are. I would think the same thing for workers' comp, right?
Well, workers' comp, specifically workers' compensation, is for the medical bills that you would have for getting hurt. But there is some short-term disability and long-term disability tied to it. And it's that disability that is where workers may or may not have incentive to start hurting in certain places. If so that's where the difference is. But specifically,
because medical,
it's just the medical. So if you go to the doctor, have to go to the ER, workers' compensation is going to pay for that medical bill. But then if you have to be off work for 3 days, 8 days, 6 months, then that's when those disability benefits from workers' compensation kick in.
So with unemployment being as low as it is, are you seeing fewer claims?
Actuarially, yeah. I mean, based on what the payroll and what the premium coming in is, the number of claims is decreasing. Now, the number of claims in volume actually may be the same or more just because there's so many people working.
Right.
But by percentage of the premium paid, definitely the claims being paid out are less than by percentage they have been in the past.
And have you found that the state compensation fund is a less expensive way to go than private? I mean, what's your experience been?
So the value and benefit of the state compensation insurance fund is they have to cover everyone, and there are certain businesses and certain class codes within workers' compensation that are hard to place.
Yeah.
And state fund, as it's often referred to, is really the only place you can go for those. So that's the one benefit. They're competitive in premium with certain class codes, but not all.
Yeah.
And I will say the one challenge with state fund is that it's quite uneven. They go through hiring phases, layoff phases, and so there's just certain times when state fund is really competitive, great service, but then 6 months later it may be different if they've gone through a layoff phase, and then now they have all new people, the service isn't as good. So it's a really mixed bag.
I've got some interesting comments on that I'll share if you remind me about classification codes.
Yeah, it can be a mixed bag
on that. Okay, tell you what, we're going to go to our first commercial break here. So again, we're talking general entertainment. Now, I remember this because as a kid, I used to watch this cartoon. So the first trivia question, in the cartoon TV show Jonny Quest, if you remember that, what was the name of his dog?
Oh, I know that.
Oh, good for you. All right. Call 888-912-1190. I think Michael's too young to remember Jonny Quest.
I've literally never heard of Jonny Quest or his dog.
Johnny or his dog, yeah. He was kind of like a like Mission Impossible, but he was a kid. His dad was like a doctor, astrophysicist or something like that. It was actually a great little one. Okay. If you're the first caller with the correct answer to that question, you'll win the free tanning certificate, which is worth over $100. So again, here in the cartoon TV show Jonny Quest, what was the name of his dog? Don't touch that dial. The Best of Investing. I'll be right back. All right. So that's segment number uno.
Is that cartoon black and white, or is it?
No, it's a color. Yeah. Probably one of the first color. Yeah, sorry about that. Are you comfortable?
Yeah.
Okay. Just make sure that you're talking like close like that.
Pretty close like this. Yeah.
That's interesting about the workers' comp.
Yeah, it's
the psychology of it.
There's a psychology.
Yeah.
So
I'm hurt. I was about to give you a raise. I think I'm feeling better.
So there is one thing is there is a cap on the disability that they'll give you, right? Like, so if you're like, honestly, we see these payroll numbers. They're pretty profound. You're a software engineer, Peninsula, making $350,000 a year.
Yeah.
You get hurt. Well, they're not going to give you $350,000 for your disability.
No,
so there's a cap. So there's really zero psychological incentive to submit a claim other than like just to get the medical.
Yeah.
Like you don't want to do the disability because you're going to take a massive pay cut.
But do they? Sometimes people might look like, I just need a break. I don't care if I'm not getting paid. I just need a mental break or something.
Yeah, and you can turn in a psych claim.
Yeah,
and those are not uncommon.
Do you see some really egregious, like, are there stories,
we definitely want to get into that.
Office of just obvious abuse?
Yeah, but what's interesting is the broker's role in that is we are not the arbiter of what is, and nor can we even really tip our hat.
Gotcha.
If we're like,
okay, let's talk about that. Yeah. I do want to make the
because we have to be the advocate for the employer and the employee.
Yeah.
So we can't really take sides.
Yeah, you just present the facts.
But we can do so with a wink too, you know.
Right. Yeah. See, I want to know what that wink is.
Yeah. It could be a little.
All right, you guys ready?
Mm-hmm.
There we go. I'm going to make a quick session for one more. So here we go. Well, welcome back to the Best of Investing. I'm Edward Brown, along with Nam Phan and our special guest, Michael Snearly. First trivia question, entertainment here. In the cartoon TV show Jonny Quest, what was the name of his dog?
Bandit.
Bandit! That is correct.
I love that dog.
I
always wanted to name, if I got a dog, Bandit.
And
Such a
it,
cute name.
yeah, it was a little white dog. I can't remember what
Kind of puggish.
Yeah, exactly. And what was his friend? What was the Johnny Quest's friend's name? Remember he had the turban?
Yes. Was it Haji?
Haji.
Haji. Yeah,
wow. I see. He was a Johnny Quest fan, like I was. Okay. I want to make a quick mention here for Hornblower. You know, what a great Father's Day gift that would be, right? Nice little cruise on the bay. Brews and cruise and views on the Hornblower dining cruise. Feast on an elaborate buffet with bottomless beer and mimosas on the beer brunch cruise. There you go. Or get dapper with Dad on a 4-course seated dinner cruise. Spend quality time as you cruise under the Golden Gate and around Alcatraz and relax while listening to live entertainment. Visit hornblower.com today. Have you guys been on the Hornblower? Yeah,
I've not.
You have. It's awesome. They go underneath the bridge, and you know, they can get a little rough. But if it gets too rough, they just stop and they turn around. But it's kind of cool to be on the boat and look way up and see the bottom of the Golden Gate Bridge.
Yeah, I've never been under the bridge on a boat.
It's really cool. You've been on it, haven't you?
Yeah, I have also been on a sailboat. It's a vintage sailboat. It's the Hawaiian Chief.
Oh yeah. I can't do that. That'll get me seasick.
They shoot a cannon, fire a cannon.
Cool.
Without the cannonball out by Angel Island, and you can hear the echo. So anyway, Hornblower is great too. I've been on the Hornblower. Yeah,
that's a very cool thing. Okay, so we are in the studio here with Michael Snearly, who is an expert in insurance. Specifically, today we're happening to be talking about workers' compensation. And I had the little story that I was going to mention is that it's incredible sometimes how the classification that workers' comp, like from the state fund, wants to classify people, where I know this company that has a campground, and the general manager basically works in the office, but because sometimes she has to get up and go to the bathroom, which is outside the office, they basically, oh, I'm sorry, that's dangerous. You're just like as dangerous as a repair person repairing saws and stuff like that. And it's like, and you can't fight it.
Wow.
And you're talking about premium of probably what, 30% or so of the. So if you're making, so you're making $10 an hour, and then you got to pay the employer has to pay an extra $3 an hour. I mean, it's unconscionable.
What would the difference be if the bathroom wasn't outside? Like,
no, I mean, they just basically just said everybody has a dangerous job just because they're there. And I said, well, so yeah, if the bathroom was inside the office, it's like, well, yeah, but she has to park her car and then she has to walk to her office. I mean, it's just like, come on.
Yeah.
Wow.
So there is a means of recourse, but it's a little, it can be positive and negative. We always counsel our clients to tread lightly because they're going to come to a full audit of all the class codes. So you may win on the one that you wanted to win on, which would provide some benefit, but then they may realize, well, actually these other 3 were also misclassified, so it's just, it's one of those, it can be a difficult pill to swallow, but sometimes it's not worth fighting.
Just make everybody an independent contractor.
Which is another discussion with HR.
Exactly. I mean, can't exactly do that, but always really qualified.
That's kind of an employment issue. But Uber tried it, and
that's right.
They're getting along with it, I think still.
Now that I can see, because you really are. You decide what hours you're going to work. Uber really doesn't have much control.
Well, the courts, I think, just decided that Uber has to prove it now. So the state is saying their employees, you have to prove it to us otherwise. Whereas it was kind of it was the opposite in the past, where Uber was saying they're contractors, and the burden was on showing that they were employees.
Yeah, and you're seeing that more with the gig economy. I mean, there's so many services out there now where you essentially can get a part-time job. Yeah. Right. Just doing.
Well, being part-time, you can still be an employee. But something like Uber, I mean, you decide what hours you're going to work, and you decide, I'm going to take this job or not take it. I mean, otherwise, anybody who's, let's say, a CPA or a lawyer who has their own business, I'm sorry, you're an employee. It's sort of like, the IRS basically, or I should say Congress, because they're the ones who actually make the rules. The rule is everything is income, everything, unless they specifically say it's not. So in other words, when, okay, let's say you bought IBM for 100, and then a week later you sold it for 101. If they didn't specifically put an exclusion in there for the cost of the 100, could actually theoretically tax you on $101, even though you only had a dollar of profit, because you received 101.
Right.
But there's a specific law that says, well, we'll be nice and give you credit for the fact that you actually had to pay $100. So you have basis in that. But can you imagine that? That way they capture everything. So that's what the state of California sounds like what they're doing, saying, look, everyone's employed. Now you got to prove why you're not.
Right. Specifically with Uber, and it does relate to workers' compensation, because when you have a high class code, the temptation for those employers is to make everyone an independent contractor. And so the state of California has had to define their rules very clearly as to what is a W-2 employee and what is a 1099 contractor.
And it's not just workers' comp. Then you have unemployment insurance, and you have FICA, and you have all these other things you gotta pay on them.
Well, with companies like Uber and Lyft, it's probably a race to autonomous vehicles. So, so there is no driver.
Yes, but they're going to tax the car as an employee. And then
the car gets flat tire.
Yeah, the car gets flat tire and puts in a claim. Yeah, exactly. So, no, you want to ask them about any fun stories, right?
Yeah, I mean, so you probably see some people who try to bend the rules a little bit.
No, in California, come on.
Well, anywhere. I suppose it's probably human nature, but you probably have some stories around the water cooler of egregious claims, but you probably can't talk about them. But
just don't name names.
Yeah.
I won't name names. There's certainly cases that look quite suspicious to us, but our role as broker is to advocate for both the employer and the employee. So we ourselves cannot make the judgment, nor should we, nor are we called to.
So it's not a conflict of interest, the fact that you're kind of representing both parties.
Right. Because we want what's best for both. We're going to advocate for both. That's our goal. We want employees treated, and if it's fraud, then we believe that will come out in a proper investigation, which is what the carrier will do, and sometimes have to go to court. But I think the funniest one, this wasn't my client, but
I tell you what, we're going to tease the audience because you got a funny story to tell. Oh, good. So audience, you can stay with us. We do have to cut to another break. We have these things called hard breaks. So the station actually says, got to cut out at this time. No ifs, ands, or buts about it. All right. So here's our second trivia question. I'm not going to sing this one. Okay, not yet. Maybe when we come back.
Not ever.
Okay. Not ever. Thanks. Yeah, you love to hear me sing 10 or 15 miles from here. Okay. Which TV show's theme song starts with the words "Come and knock on my door"? You know this one already? I didn't even sing it to you. A lullaby. All right. Call 888-912-1190 for the first caller with the correct answer. You're going to win that tanning certificate. Which TV theme song starts with the words "Come and knock on my door"? Don't touch that dial. We'll be right back. Don't say the answer now. Do you know?
Oh,
when I sing it,
I know. It's from the 80s, I bet. It's like
70s, actually.
Come and knock on my door.
That's it. Yeah.
But I don't know what the name of the show is.
I got all these old
half the battle
nostalgia.
Yeah, you're hitting my sweet spot.
Yeah.
The 70s. Oh, that's sad.
Yeah, but you're not that old, though.
I have a good memory as a 4-year-old.
Yeah. Well, Michael's even younger than we are.
Yeah, that's right.
Not much.
Wait, you're how old now?
I'll be 40 this year.
Child. He's a child.
I'm a mere child.
10 years younger than me.
That's right. Yeah.
You know what's sad? My wife texted me. She says, "Hey, guess what? We got some great news. Your AARP." Seriously, that was this week.
That's
hotel discounts. Yeah.
And I'm like, yes, we're gonna go to IHOP
that's it.
at Daddy's hour, and then we're gonna use it. It's gonna be like $10 for the 3 of us.
Yeah. The problem with that is they don't just do ARP. I mean, you gotta be like here. I can't wait till I'm 62 because then, or 60, I think it is for theater tickets, right? You get the less for being a senior at that point. Okay. All right. So Michael's going to tell us a funny story. There you go. Welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with Nam Phan and our special guest, Michael Snearly. I should say, and our special guest, Michael Snearly. Okay. Second trivia question: which TV show theme song starts with the words? Okay, Michael, sing it to us.
Come and knock on my door.
That's it, exactly.
That's excellent. Three's Company.
Three's Company. That's right. Very good. See, he remembered.
I knew the song, but not the name of the show.
Yeah. Okay.
Good teamwork there.
That's very, yeah, exactly. Okay. So we teased the audience just before break about coming back with a funny story about workers' comp. Go ahead.
So this wasn't my client, but the best story I've ever heard was a housekeeper fell down some stairs and got hurt, obviously. And when asked, and didn't even necessarily need to share this information, this is not necessarily pertinent to the claim, but when asked how it happened, she said that a ghost pushed her down the stairs.
A ghost, yeah, because workers' comp is a no-fault type.
Right. So if you fall down the stairs, you're hurt. But when asked what happened and how it happened, she said a ghost pushed her down the stairs.
But again, it didn't have any bearing on the claim.
Right. If she's hurt, she's
Hurt.
covered. But
did she not know that, and that's why she
maybe
came up with that?
I don't know. Or
yeah,
she's
but
just
you know
crazy.
what? That's a good point. Yeah, but that's a good point. Maybe she thought if I can like show that it's not my fault,
yeah,
I get paid. You know, it's so funny because from the opposite end, and Michael comes from Kentucky, which is where my father-in-law came from. Now, this is how Kentucky thinks. Okay, so my father-in-law was hoisting up about 4,000 pounds worth of stuff. He was a moving man, and it was about 10 feet high, and the rope broke. And it hit him on the back, and he didn't get knocked out, but it broke his back and both of his knees. I mean, this guy, he was in a wheelchair for the rest of his life because of it, right?
Wow.
So he's in the hospital, and you know, hey Duke, how you doing? Oh, mighty fine, you know. And so I said, listen, I go, you can't really work anymore, and so you know, we got to figure out the forms and you know, get the attorney involved. Oh no, I don't want to take advantage of nobody, you know, no insurance company or any of that. So I said, dude. I go, this is the opposite of taking advantage of somebody. I said, we're trying to just get you back to square one,
right?
You know, and so he got some small thing, which was just, it was ridiculous because he didn't want to take advantage of anybody.
Yeah.
Even though he's in, you know, all that pain, and it wasn't his fault, and
right,
you know, all that kind of stuff.
And that's what it's there for.
Too. That's that
generation, exactly.
Self-sufficient, you know.
Yeah, no government handouts.
Right.
Yeah. Versus, there was another person who was a cleaning lady who was making, you know, minimum wage. She claimed that she fell down cleaning a shower, and suddenly, and this was apparently let's just call her a rather large woman, right? And she claimed basically she can't work for the rest of her life, and state compensation board paid $125,000. And this is somebody who makes about $20,000 a year, and she claimed apparently, you know, she got a hold of some friend who got a hold of an attorney who got, you know, yada yada yada,
right.
And it's like, you know, and now people don't really understand why our rates go up the way they do. You know,
yeah.
And it's fun. It's so funny because you know you have these situations where people are kind of going, you know, yeah, stick it to the insurance company and all that, but it's like, if you stick it to the insurance company, then everybody's got to pay.
Yeah.
So you don't want to give someone $1 million for, you know, a little tiny claim. I mean, it's funny. It's funny, strange. Let's say with PG&E, right? People want to penalize them for the fires that happened in Santa Rosa, and I can understand that, right? But the problem is they just basically then go to the PUC and say, hey, we lost $1 billion because of these claims. Everyone's rate's got to go up now. And the PUC says, yeah, that makes sense. So you have to be kind of careful what you wish for.
Right. Yeah. You want it to respond when it's supposed to respond, but when there's fraud or you're trying to stick it to them and add extra, then those costs get passed around too.
Okay. So Michael, you have a lot of knowledge in workers' comp, and I know you do other personal lines, business lines,
commercial lines.
What's the name of the company you work with?
International Pro Insurance,
Okay.
Offices in Novato, San Francisco, Menlo Park, and San Jose.
Okay. And how do people get a hold of you if they have questions?
The best way is by phone. My office line, direct line is 415-223-5549. 415-223-5549.
Okay, very good. Speaking of the fires, an email came in And it says here, this was for either you or for Mark. It says, I've heard that you may be needed to provide loans to the fire victims in the North Bay. Why would that be? Didn't fire insurance cover the losses?
Yeah, so we're getting more and more inquiries, not just from fire victims, but from developers who are acquiring some of the lots and building, rebuilding. So, it's interesting. I went to a couple of meetings. I spent a lot of time in the North Bay this week, in Napa and Sonoma counties, and I went in Santa Rosa, went to Coffee Park this week, and it's really sad to see how flat and empty everything is. But the positive is there's development going on. There's rebuilding. So there's homes going up. There's contractors out there.
Is it all like quote cleaned up?
I don't think so. I don't know that it's clean. I mean, generally looking around, all the debris.
Okay.
So to that extent, in terms of have they removed all hazardous waste, I'm not sure. But the interesting thing is, 66% of the claims have not settled yet. So they're in Coffee Park.
And
so
that's
1,200
8 months ago.
Yeah, 1,200 properties. 66% of the claims have not been settled.
I wonder, like, Michael, in your experience, what would be stopping claims on the kind of situation with fire victims?
It really is carrier by carrier, and this is where we would advise insurance is just like anything else. You get what you pay for, and if you get a bargain basement carrier, you're going to get bargain basement service with bargain basement claims handling. The carriers we've tended to work with in that area especially have been paying out the claims right away. Part of it, I think, is related to the carriers. We've heard some bad stories about certain carriers. I won't say who they are, but they've really drug their feet. Part of it is related to the catastrophe of it. If there's one home that burns in Coffee Park, even if it's a bad carrier, they may pay it. But if a carrier has like 14 homes in Coffee Park and you got to pay out on all those at the same time, it really hits into your reserves. And so carriers tend to be real slow in paying because it allows them to
getting premiums from the other.
Yeah, the cash flow issue is
it? Do they reinsurance too? Don't they?
They have reinsurance, and I mean, to sell an insurance policy in California, you have to prove that you have enough money in reserve to pay your claims. So that's part of it as well. But I think a lot of it just has to do with I'm guessing that statistic has to do more with fully settling a claim.
Could be. Yeah. But so part of the reason why people need private money is the appraiser who did this presentation said the cost of raw materials has just gone up so much. It's skyrocketed because there's been catastrophes all over the country. So everyone's fighting for the same, whether it's Houston, here, Southern California,
wood, nails, and all that stuff. Yeah.
Exactly.
I'll tell you what, we're going to come back to that. These breaks go fast, don't they? Fast and furious. Okay, third trivia question. What Tom Cruise movie takes place in the year 2054? Futuristic movie, all right? Call 888-912-1190 for the first call with the correct answer. You're going to win that tanning certificate. Don't touch that dial. The best of investing. We'll be right back. Give a little bit of time on that. Okay. You're thinking.
Yeah, I saw it.
It actually was a good idea for a movie, and it was pretty good, but then it got stupid.
You got hokey when was people in the tub. That was the hokey one.
That's right. Very good.
Told you, sweet spot.
Man, I know. But that wasn't a.
I just can't remember the name of it.
That wasn't a 70s
I can
movie.
hum the theme song though.
Yeah, exactly. I know the name of it. Yeah.
You guys make good.
We're gonna sweep the awards. What are all the prizes? Tan-Bella, Hornblower.
Well, Tan-Bella.
Hey, we'll go do the tanning, and then we'll jump on the ship.
Yeah.
So my old co-host on the sports show, Vern Glenn, won like a sports Emmy for being the best sportscaster in not just Northern California, but it includes Nevada and.
Really?
Yeah.
Wow.
Yeah, it's pretty good.
He's still doing sports?
Yeah.
For what station?
KPIX, Channel 5.
Okay.
Yeah.
Wow. He was your co-host?
Yeah. I had him and Bruce McGowan.
For how long?
Gosh, he was started with me. I mean, I've been friends with Vern for a long time, and he was doing the show with me for about 2 years, and then KPI Channel 5 or KPIX basically,
Oh, right.
CBS basically said, wait a minute, you can't do that. That's conflict of interest, because they're not a CBS affiliate. It's like, really? My show is a competitor?
Hey,
come on.
Give yourself some credit.
Yeah, exactly. All right, you ready?
Yes.
Here we go. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with Nam Phan and our special guest, Michael Snearly. Question number 3. What Tom Cruise movie takes place in the year 2054? Come on, sing it for me.
Yeah,
sing it for me.
The theme was pre-crime.
Was it really?
That wasn't the name of it, but it was.
That was the name of the song, really? I didn't
know that wasn't the name of the song, but the idea.
Oh, the idea. That's right. Yeah, you get arrested for some crime that you would have eventually committed, which is kind of an interesting theme for Minority Report.
Yeah, that's.
All right. So, Nam, you're talking about providing loans for fire victims and raw material. Okay, go ahead.
Raw materials, the replacement cost essentially to rebuild is skyrocketed.
Okay, so someone had, let's just make it simple, $1 million house. Now, part of that's land, part of it's house. You don't insure the land, you insure the house. So many people are going to be underinsured. I guess, for the most part, people try to get the least amount of coverage in theory because nobody ever thinks their house is going to burn down. But if you have a first mortgage, the bank's going to say it has to be a minimum amount, and then there's replacement costs and all this other kind of fun stuff. Is that what you're finding? Is that a lot of people were underinsured?
Yeah, they're underinsured, and so now the cost, whatever they settled with, is still not enough to cover the rebuild costs. So can they just get a loan from the bank? Some people, you would hope. I'm sure many people could, but some people maybe aren't in the credit, position, or
because some of those people in Coffee Park had, some people probably had really good credit scores and good income, and other people may have been semi-retired or just had bad credit.
Yeah, they're just a hair off, or maybe they can. I mean, obviously, we just don't lend to anyone. Yeah. So we have to see an exit out of our loan into a conventional sometime in the future. So, I mean, just like anyone else who comes to us, then, our underwriters look at their qualifications, not only for our loan, but for the exit.
So some of the people are actual homeowners themselves, and some people would be contractors who are, I don't want to call them speculators, but
right.
Who are looking to
and
prospectively do it.
And right now we I think there's 16 property lots on the market for sale right now, because the people probably just took the proceeds and said, we're just not going to rebuild, we're going to move. And so there's 16, which is according to this appraiser's report, is trending up. So you're seeing more properties come on the market.
How much are the lots going for?
Median I think was like 190,000 for Coffee Park area. For Fountain Grove, which is another area that was hit really hard, it's closer to 200 or 300,000 for the lots. And there were more lot sales at the beginning. Now it's starting to taper off. So I thought that was interesting. But to rebuild there, it's going to cost even more, just because the footprint of most of the homes was significantly larger than Coffee Park area.
Interesting. Okay. Yeah. What kind of terms would you be charging, you think, on this?
It depends. On some of the construction loans. Gosh, I don't want to put numbers out there. I'm not the expert on that, but Matt Cordes in our offices. But probably in the 9s, 10s.
Okay. So again, they'll go to the bank first if they can. If they can't, then Pacific Private Money might be able to.
Yeah, for the construction for banks, it's going to be harder for builders to go to a bank.
For the builders, sure.
Yeah, so that's something we specialize in, something that we're really gearing up for.
And where do you guys get your money to go ahead and provide that?
From you, Edward.
Yeah, there you go.
Now from accredited investors. So the other side of our business is our fund, is the lending component, where where does that funds come from? It comes from accredited investors throughout the Bay Area, Northern California, who are interested in earning returns in 7.5% to 8% range. And so they can invest with us, $50,000 minimum. We use those proceeds. We put them in a mortgage pool fund, and then we deploy them across loans throughout California.
And do you have a deal of the week for us?
Deal of the week. This one we just got. This one is a son who's looking to purchase a home, can't qualify on his own just because his income isn't all. He doesn't meet bank qualification from an income standpoint. But his parents are going to help contribute, and they're going to use their property as collateral.
Oh.
And they're going to be co-signers. So, not typical, not like your typical bridge loan that we do, but just another type of loan that we get. And so we're seeing, as private lenders, the interesting thing is no two loans are the same. So one week we'll have our typical bridge loan, or people moving up or moving down, but not wanting to list their home first. And then this week it was the scenario where the parents are going to come in and help and use their property as the collateral.
Yeah, and I heard some borrower recently, like referral, where everything is perfect except the borrower changed jobs like 3 months ago. And so even though he's in the same business, and his income's probably a little higher, they just said, well, wait, that's a new employer.
Yeah, that's a recurring theme. I mean, we see a lot of we see borrowers in the past who've come through just because they haven't met the employment seasoning. We had that.
Millennials.
Yeah.
Right.
Or that attorney who.
Oh, yeah,
who
that's right.
Very, very high-powered attorney, had only been with this company 18 months, and made more money in a year than he needed for the actual loan, right?
Yeah.
And this is in Napa. So we tell this story all the time at all our
He wasn't an
events.
attorney, but he worked for a big computer company.
Yeah.
Yeah.
Okay.
Yeah.
So,
But
but his income was far and away, more than the actual loan amount. But the conventional lender said, "Listen, you've only been at your job for 18 months. We need 24 months of employment seasoning."
Yeah.
So we put him in a loan. He refinanced in 6 months.
Yeah.
And everyone won. So it was great.
And what kind of yield are you paying to the investors right now?
7.5% to 8%.
So, okay, and so you're talking about conservative loans. I remember, I think we mentioned this, but there was a loan that you guys did not too long ago, where the purchase price was $800,000, and the borrower came in with $600,000 down. Couldn't get a $200,000 loan.
Wow.
Because the $600,000 was gifted to them, and it hadn't been seasoned enough, and they were in the process of selling their other house in Nevada.
Right.
So, that's a pretty smoking hot conservative loan.
Yeah, and if I understand correctly, the banks, because it was gifted, there's new or tighter restrictions on gifted money because of AML compliance, anti-money laundering compliance.
That's right. Yeah,
that's actually something we should spend a little bit of time on a future call.
Yeah.
Or a future
that's right,
show.
Because I asked a banker about that, and he worked for one of the big banks, and I said, "What about this scenario?" I said, "It seems like it'd be a really good loan. Why wouldn't a bank do this?" And he said, "Well, because when you have that kind of a large down payment, there's the assumption that there's money laundering, and you have to prove that there's not." And then he said, and so when it comes from the parents, then it's like, well, now we have to look at the parents. Where did they get the money?
Wow.
And they just time and time and time.
Yeah, and that just drags out the process.
Exactly. Wow. We have another minute before we cut to break. Any other exciting things you want to talk about?
Well, I think just in piggybacking off the idea of the fires, of course, when people talk about insuring their property, they always want to have it at the lowest limit, which is wise. But at the same time, you do want to take into account the fact that it can't happen.
Yeah.
And when it's catastrophic like this, you do get the increase in materials. So whereas like maybe today it's $400 a square foot to rebuild your house, if it's a catastrophe, it's going to be $550.
Gotcha.
So you want to think about that when you put your limits together, and you also want to have a carrier that gives you that wiggle room, because there are carriers that will build in the wiggle room for the higher limits.
Oh, really?
And in the event of a catastrophe, so you get automatic replacement costs. So even if it jumps up to,
and up to code too. That's
exactly. So you just want to make sure those things are in place. And you pay a premium for that, of course, but when you need it, it's worth having.
Yeah, I can't imagine the premiums too much more because again, the odds of someone's house burning down is fairly small.
Right.
It's very small. And look, I know people don't like paying insurance premiums, but it's actually one of the most
I don't know. It's my favorite thing in the world.
High valued investments you can make.
You can. Okay. All right. Don't touch that dial. When the best of investing comes back, we're going to have some closing comments. All right. Get on the money. You guys are good.
I'll remember to talk about the next fund event.
Fund event, yeah.
So we need to get it.
It goes fast,
No, really fast.
I know. It's like, see, this is only 39 minutes. We got 17 minutes. Someone could have to do a song and dance,
I already sang.
That's true. That's true.
It's your turn.
Your part.
Second verse.
Second verse, same as the first.
Earthquake insurance.
Yeah.
Are people? I mean, is that on anyone's radar?
Yeah, more so. And I will
gone down
and one. Yeah, it's gone way down. It's not just gone down; it's gone way down.
Really? Okay.
So the premium is like so we bought our house in 2011, and the quote we got for earthquake insurance in 2011 was very high. It was prohibitively high. We couldn't take it.
And then they have like a $25,000 deductible.
35% deductible.
35% deductible. Yeah, this is just okay.
So, but then the quote we got this year was $800 for the same coverage. We got it was like $4,500. You know, and that's I can't remember exactly what it was, but it was high. It was $4,500, $5,000.
Is it just because there haven't been any major earthquakes enough to where people who have paid into it and have built into the?
I mean, yeah, that's it. Like the premium is growing, and then they're getting compound interest on the money, and it's the California Earthquake Authority. So flood insurance and earthquake does have that kind of government subsidy. So the more we go without having an earthquake, and the more people buying in with the premium, the better it's just going to keep getting for everyone until we have a catastrophe.
Yeah, and then because also, I mean, with competition, you know, if you're sitting with a boatload of cash as the insurance company, then you can say, hey, I can capture some more business.
Totally.
Lower, it's all supply demand from that end of it, right?
Right. And there is a little interesting thing about that deductible. So it's a 35% deductible, but you don't have to have the deductible to get the money. So that's something to keep in mind. Sometimes people are like, oh, 35% of my $500,000 home, I don't have $150,000 laying around. I won't get the money. It's not how it works. They're just going to give you a check for $350,000, and then you're kind of in your boat that you were talking about. You just don't have enough to rebuild. You can just get a loan. You see what I'm saying?
But what if it's an earthquake that only damages, you know, half your home or whatever? Will they? They're not.
Then they'll still give you the check of what they owe you. So let's say it's a $500,000 home, $250,000 of damage. The deductible is $150,000. They're going to write you a check for $95,000.
But in that $500,000 scenario, if you didn't have insurance earthquake, then
you're zero.
You don't have that $350,000.
You don't have anything. So, you have zero.
Okay. So 65%.
But I mean, you have to have somewhat of a major earthquake in order to
have a total loss. And another thing to keep in mind, this is a little bit in the weeds. It's the doctrine of concurrent causation, where let's say there's an earthquake, and then there's a fire because of the earthquake, and your home is damaged by the fire. You don't have to have an earthquake. Your fire insurance will pick up the claim.
Okay.
So have a bunch of matches hanging around.
Yeah, exactly. So it would have to be damaged by the earthquake.
If you're right in the middle of the earthquake, you're like, rats, I don't have earthquake insurance. Light everything on fire.
Exactly. Let's start a fire.
Well, let's take up smoking. You never smoked before. Let's take up smoking.
Smoke quick.
Yeah.
Yes. So talk about the fund event, and then let's touch on that earthquake thing, because a lot of people don't understand about that, like having to have that deductible. Okay, here we go. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host. Of course, I'll be Edward Brown all day today, but it's the last time for the show, along with Nom Font and Michael Snearly. We already asked our trivia question. So, Nom, if people wanted to learn more about Pacific Private Money and the fund, you have events coming up, right?
Right. Specifically for the Pacific Private Money Fund, we have an event coming up on Tuesday, June 19th from 6 to 8 p.m. in Walnut Creek. So to register, give us a call at 415-883-2150 or go to our website, www.pacificprivatemoney.com. It's going to be at Momo's.
Momo's.
Yeah. And if you just want to learn about borrowing, go to pacificprivatemoney.com. Give us a call too.
All right. Off air, we were touching, just the three of us were talking about earthquake insurance, because Nom had asked Michael about that. And can you clear up a couple of things on the earthquake insurance, what the perception is and then what reality
and
is?
Also the premiums, how they've gone down.
Yeah, the premiums have gone down dramatically. So this is a great time to purchase earthquake insurance. It's very cost effective at this time, whereas it has been in the years past cost prohibitive. And then another thing to keep in mind, sometimes people see that 35% deductible on their earthquake insurance quote, and it turns them off to it. But one thing to keep in mind is you don't have to have the money to get the insurance's money. You know, so if you have a $500,000 home and that's what it costs to replace, you don't have to show them you have $150,000 before they give you their money. They'll just write you, if it's a total loss, they're just going to write you a check for the $350 or so that
net.
What they owe, and then you just have to come up with the rest, and maybe you could use Pacific Private Money to fill the gap. So it's something that I think more and more people need to be thinking about at this time.
Okay, so if you had a $250,000 loss because of the earthquake, then they would just say, well, the deductible is $175,000, and give you
the rest, and then you'd have to be on the hook, and hopefully you have some cash reserves. But if you needed some extra money, there's a great place that I know to go to.
Yeah, and then also you were mentioning off air about the fire, because like in the San Francisco earthquake in 2006, it was really the fires that did most of the damage.
Right. So if the damage to the property is caused by a fire, then your fire insurance picks it up. If it's caused by an earthquake, the earthquake insurance picks it up. So if there's a fire that's caused after the fact of an earthquake, then it would be your fire insurance that responds to losses of fire.
And what's that term that you used earlier?
The doctrine of concurrent causation, which was a California case out of Southern California having to do with the
Northridge one? No.
Floods. It wasn't an earthquake case.
Oh, okay.
It had to do with like some floods, and then
mold.
And then other things that came up afterwards.
So if you have an earthquake and your house maybe it doesn't burn down, but the earthquake causes like foundation issues, and then the walls. I mean, I guess you have to look at just strictly what the fire did.
Right. Yeah. And of course, the insurance companies have phenomenal adjusters that can tell if it's arson or if it's
and phenomenal lawyers. That's
right. So you don't have to worry about that. They'll make that call for you.
I'm sure they will.
Yeah,
exactly. All right, Michael, give out your information one more time if people have questions on insurance.
Sure. Feel free to call me at 415-223-5549.
Very good. And Nan?
To give us a call us at 415-883-2150. If you want to find us online, go to www.pacificprivatemoney.com. And one last thing too is don't forget about privatemoneyloans.com.
Oh,
you're
that's right.
interested in trustee investing, that's privatemoneyloans.com.
Okay, register there and you can get some good deals.
Yep.
All right, thoughts for the day. Be miserable or motivate yourself. Whatever has to be done, it's always your choice. And the greatest weapon against stress is our ability to choose one thought over another. Right? Isn't that true? 5% of what happens to you, 95% of how you react to it. Otherwise, you look at people in Africa or starving children, you go, you have no right to be happy. Right? But for some reason, not everyone has got a frown on their face. All right. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Good. And we have 8 minutes left to go before I cut this out, assuming it really does anybody know how to get this with a microphone and the HD? Well, I guess it's on HD.
I don't remember that until we record.
Yeah.
Until it comes up.
It's something to do with Prime.
We can look it up.
You know what? Did you see the article recently about YouTube stars? There have been a rash of YouTube stars burning out.
I wouldn't be surprised because.
What do you mean?
So there's people who do vlogs on YouTube.
Oh, and they get paid like a.
Yeah, and so once you get over 10,000 followers, you can actually start making money. And there's people who have like 37 million followers, so they make a lot of money. But what's happened interestingly in the last like 6 months is that I think, I have to see the article to know the numbers, but it's something like 7 of the top 10 YouTube stars have had to take a hiatus because they got burnt out.
Yeah, because it's always on.
You're never off.
Yeah.
And the other thing is YouTube changes their algorithm but doesn't tell anybody. So they're like I get super frustrated because not only do I have to be on all the time and really relevant, but I'm dealing with this kind of animal that no one understands.
Yeah.
But so have a lot of those people like part of the frustration, have they lost a lot of their followers? Or is it just like I just don't want to be like a reality show and be on all the time?
I think it's more just the demands of having to like produce and like please these millions of people every day.
Yeah, their life is like 24/7.
Walk around with a webcam You could be like keep up with the Kardashians, right?
And just
My goal in
that
life.
just seems like a tough life.
It's a tough. And that's,
I mean, it's a lot of younger people
Yeah.
doing it because that's who their followers are. But yeah, I always read about, and they're always in the spotlight. So you do something that is negative, and all of a sudden your business is shot.
yeah.
Yeah, you got to be
So-
very, very careful.
Yeah.
Use some
Chloe
discernment.
watches some YouTube stuff, but she's 10.
Yeah.
About it, but it's like on making slime.
Yeah.
Making slime, and then there's a big thing of watching other people play video games.
Yes. In
Oh.
fact, that
One of my clients, that's what they do.
I mean, they in the
They record
esports.
video themselves.
So what they do is they're called Discord app. It's a free app, and what it is so like let's say you're playing a multiplayer game, you can use Discord app to communicate with the other players, but you can also, and this is where they're actually seeing growth, is in the esports. You can
Yeah.
actually then listen to like professionals play and watch them play the game. You see what I'm saying?
Well,
you know
what
So
they
you can
sold
hear
out-
what they're saying to each other, so you can learn how to be a better player. It's like
Yeah.
you can it's like being in the huddle of a football game, and it's like, whoa, I didn't know Tom Brady said that. Like,
Right.
but these guys are playing real high level, whatever games they play,
Well,
and that's where they're seeing a lot of value for their company.
Well,
Wow.
my son's friend is like the founder of some kind of an esports type of thing. They sell out.
Oracle Arena.
Yeah, they'll sell out a
where they
whole
have
arena.
competitions.
Yeah.
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 And so there'll be 20,000 people at like Staples Center
Yeah.
watching two guys play a video game.
Or teams,
Or
a lot of it's
yeah.
now teams. But yeah, they're all talking to
Crazy.
each other, and
Mhm.
and you kind of want to, if you're an amateur player, you want to hear what they're saying. So they've created the app that can be used, and you can actually go back, and it's like watching the video of it because you can go back and see how they did it.
Oh, thanks. Yeah, I mean, I could see how that would be appealing if you're totally into some kind of sport. Like, even people get nerdy on chess. Chess competitions and learning moves. And
Yeah.
stuff like
But you can learn. I mean, I can see where you can kind of learn. Like, I mean, it's funny because I'll play Hearts
Mhm.
on and it's amazing how playing on my phone, I have learned certain techniques, not because of the computer itself,
Yeah.
but just like as an example. Do you guys play Hearts?
Mhm.
Okay, so if I'm dealt the queen and I'm passing to the right, and I pass the queen, then I know that I'm
Yeah.
the next person playing, so I can easily play the king of spades. If they say I'll play the three of spades, right? I can play the king, know that I'm not going to get dinged for it.
Mhm.
And then I've been learning to well, what happens if I don't just play the lowest card? If you play like a middle card, and I'm picking up all of these tips within myself.
Yeah.
And again, I know I'm playing against a computer, but it's like if I was playing with a real person,
Right.
it'd be like, or if I was on the receiving end, I go, wow, that's kind of interesting strategy. So maybe next time we'll teach everybody about Hearts and all the things on
who's
that.
a big chess player? Is Clay Thompson.
Oh, really? Okay. I know he reads the paper a lot.
He,
That's
yeah,
good.
yeah, he talks to grandmasters and stuff
Wow.
like that. Gets there.
Well, there was this
Right.
young girl who was like 12. She could play like 8 boards at once, blindfolded.
Oh my god.
She'd remember
She's gotta
what
be a
easy.
prodigy.
Yeah, oh yeah. I mean, it's one thing to you just play 8 boards and go, oh, let's see, go to queen, and just remember what the other person. I mean, that's just.
Yeah.
Well, John Havlicek from the Celtics,
Uh-huh.
apparently he memorized the Houston phone book, and Houston, their phone book was like
Right.
really thick. I mean, I
Really?
don't know how someone could do that.
Wow.
Photographic memory.
Yeah, but I mean, that's a lot.
Hi, I'm so and so. Yeah, I know.
Yeah, you're on page.
Yeah, your number is what?
Yeah.
Anywhere it goes in Houston. I'm so and so. Yeah, I know your phone number is
Yes.
this.
I found you on page 16.
Hi, I'm so and so. Can I have your never mind.
I got
I'm
it.
at a bar. I'm gonna be calling you.
Right. So you got the times down?
Yes, I do. Thank you.
Okay. In fact, next week on the sports show, I'm going to have not my son's friend, but somebody else who is in the
Esports?
same esports thing.
So how are they your client? Because they have policies under your.
Yeah, so
Okay.
like their general liability
Yeah.
and workers' compensation, and I think that's all we have for them right now. They're pretty insurance averse. They have a ton of investment, so they're not they're a little bit cavalier about their risk, honestly, in my opinion.
Well, they might hurt themselves, you know.
Yeah.
I get the carpal tunnel.
Right.
Yeah. So but they just feel like they have a ton of money in the bank, so they're like, if somebody sells $1 million, we're not really concerned about it, and that's fine, you know. But
when the claim comes, they go, you know what? For $2,000,
exactly. That's why.
Claim.
Look, I mean, that's something we could talk about on the show, is the value of insurance. I mean, the truth is, when you pay $2,000 for general liability for the year, you have access to the $1 million that the policy is, but you're also getting a lawyer on retainer, because a general liability policy is duty to defend. So if it's a frivolous lawsuit, then the insurance company will respond with their lawyer, that you don't pay a dime for, other than that you've paid for the premium. So, I tell people who are kind of like on the fence, it's like, how much would it cost for you to have a lawyer on retainer for a year?
But $39 a month for Legal Shield or one of those things, you know.
So
Office Depot is now coming up with that.
Really?
Do you see that? Office Depot. Yeah, you can buy the legal thing, $30 a month or something through Office Depot. I can't remember, but BizBox or something like that.
It's one of the cashiers.
Yeah,
I like to use this. What's your claim?
Let me Google it fast.
This is
No,
what
but
you're
that's
supposed
a
to do.
good point, because you say, what are the odds of having a real claim is one thing, but then just getting a frivolous lawsuit, you still have to answer it.
Yeah, you still have to answer it, you still have to be there, and they'll do it. There's duty to defend, so they will do it, and they'll get it dismissed. But then you don't have to show up, you don't have to hire a lawyer, you don't have to vet the lawyer.
That's true. That's not something that you really